low, which is the next structure low, then of course the high was exactly the same price. So this is all inside structure, all of it. So when we broke that structure low, this is now the structure high here. So it's obviously very difficult at the moment to be anything but sell side only. And therefore, to be on the right side of trade, you would be selling trade at the moment, all the way through this morning, last night's session. What you've got to do in those types of environments is when you're in a sell trade, when you're in a sell environment, you draw the top lines. You know where the bottom line is because that's why you're sell side, right? You draw the top lines. And what you do is you trade the RGL break below, for example, a Heisman's. 1 second. So when you're thinking about this, just draw the pattern. If this is our pattern here and we break structure here, we know that when we break structure, assuming that's our low, that this is our high. So now we draw in every single level 1 at the top edge, don't we? So when the price pulls back and drops, we draw in a level 1. If the price then breaks here without making a new structure low, then your opportunity is now there to sell it, isn't it? And that's the systematic entry process. That's how you simply get back into the right frame of reference. If you don't know what you're doing, if you've lost track of where you are, it's very easy to get back into the track because that's where your sell is, right here. That's where your sell is, right there. If you're going to go back into a short sell, X marks the spot. If the price comes down to here, for example, and goes back above, well, you just keep doing the same X's. X marks the spot, doesn't it? If the trade trades through, now this is your price. It's still inside. It hasn't changed. It's still inside. And then if this happens here and it comes down, then of course, you just keep doing it. X marks the spot. So if the price comes up, there's your sell trade there. So if these are all your sell trades and they're very easy to spot, can you see where your sell trades would have been on this chart? Can you see where they would have been? Well, we can zoom in a little bit more, I think, and you can see where they would actually have, been a possible short sell. You can see there was a possible short sell against that level, correct? That made some money before it turned back up. Then there was a short sell against that level, which made some really nice money before it turned back up. And then there was a short sell. Sorry, I'm picking up the lines. It's zoomed in that much that the lines are a bit thick. There's a short sell against that level, made some money before it turned back up. And then there was a short sell against that level, which made some great money. And then we had this level, which didn't quite trade. And then we had a short sell against this level here. And that gave us the brilliant sell-off there. And then we had another key level there that never triggered until this phase here. Now, obviously, as you drill down into lower time frames, you'll start to recognize where the opportunities are. So when I see those short sells, can we all agree those short sells become very, very easy to spot? There's a short sell in there. 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 A short sell in there. There's a short sell in there. And there's a short sell in there. So they're all your short sell opportunities, aren't they? And that's your systematic entry process. Now, obviously, that's not including a profile type process where we wait in a lower time frame to see a double distribution down and then start the short selling and so on and so on. But that gives you a basic idea of how you could have easily have got back into the process. And when I say easily getting back into the process, remember, this short sells at a price of about 94, right? It's just traded 74. So that short sell would have done you another $1,000 on the S&P without even worrying about your value lines. Somebody said it earlier about trade what you see. I don't know who it was. It might have been Scott. Trade what you see. Just trade what you see. Trade how it's trading. Trade with the flow. Whatever it is, terminology or phraseology you want to use with it, trade that way if you've lost track of what you're supposed to be doing. Now, I like the bottom edge at the moment. I think the buy at the bottom edge makes a lot of sense with the volatility starting to get a little bit of a short sell creeping into it. It makes a wee bit of sense for me at the moment that the bottom edge is becoming just that little bit more biddable. And if you look at your volatility, you'll understand what I'm talking about, yeah? So does everybody see that when we reach that bottom edge for the exit, does everybody see where the buy trade came in? Now that's not a structure, but does everybody see where the volatility changed its shape here? It was very bearish down to that point because this was still lower holds, wasn't it? That was still lower holds. So when we see that, we can start to recognize that this has obviously got to be your walkaway exit, which means this could well be your buy opportunity on the retest. Now remember, the one thing you remember about this is you are at the low, which means what? If you're at the low, this is not going to be an easy buy trade in any world. You're always going to be aware that this is going to be a challenging price, always. So you've just got to be careful. Now we had a recent, that's the good news. We had a most important recent and macro at the same time. So we had this little buyer coming in early. That gave you the warning that the buyers were there. And then you bought below that little trap right there. It's always best to get the big level with a little level before it to give you the quality of entry. And that's exactly what happened on that trade there. So from that point onwards, you can see that the structure of volatility's changed. And in addition to the structure of volatility changing, you can see a few other things starting to bubble in the background. And that's something that you would be paying attention to. Real yields were falling, which means the dollar would start falling down into this, which gave you the bullish bid coming back in. But the problem is real yields started to kick back up again, which would bring the dollar back on the buy side of this narrative. And that's obviously going to be one of your big concerns. We talked about the 2s 5s, and you can see that the 2s 5s, not exactly the most bearish, but they certainly have drifted lower, taking some of the bottom edge pressure off this market for the time being and allowing us a relatively safe and easy buy trade at the bottom edges to step in. So when we see that happening, we can see the shape forming. You know it's against structure, you know it's against the RGLs, you know it's not a big key level, and you know it's a big challenge because obviously we've got our big target just below this 11,400. Remember we gave you the 11,400 level earlier? We gave you that level earlier. Yes, it's basically the measured move of this prior US Open bracket. Everybody knows that? So there's the US Open bracket there. We gave you this target price of 11,400 to work down into, and that's where your buy trade will be originating from, guys. So I'm assuming there's been a few scalp buyers coming in. It's just scalp bought the bottom again. If you took it, you know it's a challenge. As we say, it's a challenge. You can see it's just scalp bought the bottom edge again. And if you decided to buy into that, you can see it exploded the price as soon as you go back into that RGL there. And that's a great little buy trade reversal off the bottom edges. All good? Everybody in line with that narrative? Is everybody on board with that? Anybody disagreeing with that storyline so far? Now remember, the key to this is just do not take your eye off that interest rate curve for the day, guys. Check your volumes as well. If you want to check your volumes, you can see that the volumes, which will just be coming up in a short time, did start to diverge just a little bit at the low prices here. So the buyers starting to show up. They're not buying at higher prices, but they're starting to show up certainly at the lower prices, and that means that you're going to be working. But remember, if you know it's a buy trade, you know it's a bottom edge, you know it's going to be tough, right? It's a simple way it works. If you're a buyer and it's a bottom edge and it's a low of a day, you know it's going to be one of these kind of crappy ideas that you've got to keep working it and working it and working it and working it, guys. You got to keep working it and working it and working it and working it. It's not going to be easy, so you make sure you understand that. Where do you become bullish in a Theo type trade? Well, that all depends on your context, doesn't it? There is no specific answer. Where do you come bullish in a Theo context? Well, any double distribution higher when we get a solid hold. So we could probably all agree that we've now got a good solid double distribution. Now, when we came into this area here, that was obviously the sell side distribution, the final sell side distribution, yes? So this market doesn't really go bullish until we clear 422s. At the moment, it could be simply short covering rallies. If we get buying rotations above 420s, that's not a short covering rally, that's buyers. You understand the difference? So that was a good buy trade if you decided to play. It's still bullish, still making a bit of upside gains, and relatively straightforward to see it. But it is a challenge because it is a low price. We know that it's a challenge, guys, when we trade lows, and life is just so beautiful in its own way, of course. Good trade, guys. Well done, anybody that's working it.